Welcome back to Iraqi Dinar News, your reliable source for updates on the Iraqi dinar, the global currency market, and financial developments impacting revaluation expectations. Today's report contains timely insights that could help you make more informed decisions, especially if you're considering an exchange in the next few days. So, if you are planning to exchange your dinars immediately, you may want to hold off. There's a lot happening, and the next 48 hours might be pivotal. Let's begin with an important reminder for all our viewers. If you haven't already, visit dinaropinions.com, a platform that consolidates the latest perspectives, news updates, and Dinar Guru commentary all in one place. It's a helpful resource if you want to stay ahead of the curve during these crucial developments. Now, on to the main event. The National Investment Commission, NIC, recently confirmed that over 130 fully approved investment opportunities will be showcased at the upcoming Iraq Investment Forum. These forums have become high-profile platforms, regularly drawing interest from the world's most influential corporate investors. One such event is the anticipated IBBC and NIC gathering, scheduled for mid-June, which could attract a wave of international capital regardless of the current exchange rate. Why is this significant? Because these institutional investors don't necessarily prioritize what the exchange rate is today. For them, it's all about growth, infrastructure, and return on investment, calculations that hint at confidence in Iraq's long-term financial environment. Now, here's where things get interesting. Based on reports and market chatter, the Iraqi dinar could potentially see better rates within the next 48 hours. Yes, you heard that right. Just 2 days from now, the exchange rate could shift in a direction that benefits holders. That's why financial analysts are urging dinar holders not to rush. Exercising a bit of patience could translate to serious savings or profits. Let's break this down further. Currency exchange rates are influenced by a variety of factors: economic indicators, market speculation, political stability, and central bank policy. For the Iraqi dinar, several of these elements are currently aligning in a way that could favor a rate adjustment. One of the most important things to monitor right now is communication from the Central Bank of Iraq. Keep your eyes on announcements related to economic reforms, digital currency infrastructure, or changes in monetary strategy. These updates often serve as early indicators for major currency moves. Additionally, if Iraq continues improving its diplomatic and trade relationships globally, such developments could enhance international confidence in the dinar-turf deal, fueling momentum for a higher valuation. Timing your exchange is just as critical as knowing when not to act. Exchanging your dinars today might seem convenient, but it could come at the cost of missing a much better rate just days later. How can you avoid that mistake? Set up alerts on platforms that track exchange rates in real time. Several apps and online tools allow you to create custom notifications that ping your phone the moment the dinar reaches your desired target. On top of that, not all exchange platforms offer the same value. Transaction fees, rate spreads, and processing charges can vary dramatically between services. Do your homework. Compare rates and fees on different platforms to find the best deal. Every fraction of a point matters when you're dealing with larger amounts. Now let's address the elephant in the room, the risks. Yes, waiting for a better rate is a gamble. While signs point toward improvement, there's always a chance that the rate could move the other way. That's why you need a clear strategy. Decide in advance the exchange rate at which you'll move forward. If it hits that level, great. If not, at least you had a game plan. Also, take into account your own financial situation. If you urgently need funds, waiting may not be viable. However, if your financial position allows you some flexibility, exercising patience could reward you handsomely. Let's make this more relatable with a quick real-life example. A close friend of mine had a substantial amount of dinars and was ready to exchange last week. But instead of rushing, he set alerts, monitored credible financial news, and waited. When the rate improved just slightly a few days later, he exchanged at a much more favorable level, saving thousands of dollars in the process. That's the power of being informed and staying patient. We'll pause here, but in part 2 we'll dive into the discussion around REI, including the debated significance of the $3.22 benchmark and whether waiting for that number is really the right strategy. We'll also look at investor psychology, market momentum, and how to prepare yourself whether the dinar spikes or dips. As we continue our analysis, let's shift focus to a concept known as REI, or Relative Exchange Indicator. A lot of excitement is building around the $3.22 level, which some investors consider a symbolic target. But what does this figure actually represent? It's not just a random number. The $3.22 mark is seen by many in the investment community as a key psychological threshold, an indicator that could signify the diner's return to a strong, globally recognized valuation. When this benchmark is mentioned, it often carries the weight of history and economic potential. But here's where it gets more nuanced. Some analysts believe we might see a short-term pullback before reaching that milestone. A potential dip toward $1.25 per dinar has been discussed in expert circles. This doesn't mean a collapse. It could actually be a setup for upward momentum. Sharp investors know that temporary corrections often present opportunities. When values dip, it creates a buying window for those who understand long-term fundamentals. If the underlying support for the dinar remains strong, which current indicators suggest, then entering the market around a $1.25 valuation could be a strategic move. Market momentum is real. When the first wave of buyers steps in, it typically leads to a domino effect. As more investors follow, prices may rise rapidly, potentially closing the gap to that long-anticipated $3.22 level. Let's break down what might trigger such a move. First, investor sentiment is a powerful force. Positive news, such as a new economic agreement, banking reform, or regional investment, can quickly sway the market. We've seen how even rumors of progress can cause spikes in trading volume and shifts in market behavior. Second, industry trends and global economic patterns can have a cascading effect on regional currencies. If there's bullish activity in Middle Eastern markets or a resurgence in oil-based economies, the Iraqi dinar could benefit as part of that broader movement. Third, trading volume matters more than people realize. High volume means greater interest and usually signals strength. On the flip side, low volume often means volatility, the kind that can lead to unpredictable swings. That's why monitoring trading activity is just as important as watching the actual exchange rate. So, what should an informed investor do? Some will wait on the sidelines, hoping for the dinar to rise on its own. Others are entering early at the first sign of movement, using lower target levels like $1.25 as their launch point. This gives them the advantage of capturing upside gains if and when the rate climbs toward $3.22. Still, the waiting game isn't for everyone. It's stressful, uncertain, and often leads to missed opportunities. The reality is, successful investors don't just wait for the perfect number. They evaluate the situation, factor in risks, and act based on credible data and solid strategy. Let's revisit some historical patterns to illustrate. There have been countless examples of people who waited too long for a perfect price, only to see the market move in the opposite direction. For instance, someone might hold off, expecting the dinar to drop further, but instead it jumps, and the opportunity is lost. Timing the market is extremely difficult. Instead of gambling, many experts recommend making informed decisions based on reasonable expectations and personal goals. So what's your best course of action right now? Start by educating yourself. Read trustworthy sources, join financial forums, watch what reputable analysts are saying, and stay engaged with the community. The more perspectives you absorb, the better your judgment becomes. Next, build a personal plan. Know your budget, define your goals, and decide ahead of time how much you're willing to invest, or when you'll pull the trigger on an exchange. Don't let hype push you into rushed decisions. And perhaps most importantly, diversify. Putting all your money into one asset, even if it's something as promising as the dinar, can expose you to unnecessary risk. Spread your investments across different sectors and instruments. That way you'll have a safety net, even if one strategy doesn't go as planned. As we close today's update, remember, knowledge, patience, and planning are your strongest tools. The next few days could bring major shifts in the dinar landscape. Whether you choose to act or wait, make sure your decision is backed by research and aligned with your financial well-being. If you found this breakdown useful, please give this video a thumbs up and share it with others in the dinar community. Drop a comment below with your thoughts. What's your personal target rate, and how are you planning to approach the coming days? Stay informed, stay ready, and stay tuned to Iraqi Dinar News for the most current updates on revaluation developments and global currency insights.